What's up, guys? Welcome back to the channel. You know what? Last week was so crazy. I decided to make video again. So hopefully I'm gonna continue this every weekly, at least weekly, and maybe every day if I can. But weekly, I'm gonna try to do it because I have to prepare myself anyway. So why not? Make a video for everyone to see, and if you might be benefit from it. So I did made a video yesterday, but my microphone got like messed up and this was so staticky I didn't release it. Like, it was like 25 minutes video, and today I have a new microphone. I'm hopefully is not gonna be the same problem, because I don't want to talk for another 20 minutes and then turn out to be bad again. I'm sorry for the introduction or this problem, but let's go straight to the chart here. So basically SPY, I mean, last week, and then we have that reversal, Pearson pattern, and then we get to this, and today is Monday, right? So inside candle of this chart, right? So right now, I mean, at this point, there is actually before we were expecting this to go up, to hit here, move back up, and then move down again. And this is like from A, B, C, or D, whatever. So I'm not sure here, but yeah. So basically, we're expecting to drop, like, not going to be dropped right away, but this drop right here actually changed a lot, including, I believe, it changed the technical a lot, and also because due to the basically kind of fundamental, because of the potential war from like, well, not potential war, it is a war now, but Putin invaded Ukraine, and that kind of changed a lot of things, and this put in this candle. So technically it's kind of changed too. So let me show you what I'm talking about to make it clear. So before, this is what we were expecting, right? So we go down, hopefully go close to the low, or maybe a little bit higher, and then we bounce, and then 50%, and then we make it down. So this is like measure move, right? You go down here, and then you go up, and then go down, measure move. So this is what I was expecting, and that what we were expecting, due to the Fed going to be increasing rate by March 16, right, by 0.5, and then maybe like 6, 7, 8 more subsequently afterward. So that what was kind of like expecting. So this, the technical, that was with that, but due to the Russian and Ukraine war right now, that kind of changes everything. So basically, we go down, we make the bounce, right, and then we go down. Now we make a lower low. So this is the problem. When we make this low, I mean, it could go up, depend like how much up we're gonna go up, and that's going to be the move down. The move down, I mean, that doesn't have to move down at all. It's because there's variation here, you could see, right? So it doesn't have to move down. But if there is a problem, like Putin decided to like go nuke everybody, then we'll probably go down a lot more, right? But I mean, it still could go down, but I think the downside is actually limited now, because compared to this, the downside is much more, extreme compared to this. So basically, at this point right now, if you draw a trend line, right, it go down. Now it's become like a falling wedge of a falling channel, which in the short term, in some way, it is kind of bullish. In the medium range term, it's going to be bullish. So we're going to break out of the thing, and then we bounce. So at this point, because of the because of the war, the interest rate might change, right? So basically, if we could show you what this one is.
In that case.
So this takes 50 basis points completely off the table. It takes the 8, 9 hikes that a lot of people were talking about for this year off the table, and thankfully so, because you heard me say on your show that I didn't think the U.S. economy could accommodate and live with such slamming of the brakes of monetary policy. It means the Fed is going to have to be even more careful, and it's going to have to tolerate higher inflation. Nobody wanted to be here, but we were already far away from the world of first best in terms of monetary policy, and now we're going to get even further away. So we're going to have a very sort of unsatisfactory situation when it comes to inflation and when it comes to growth, unfortunately.
Mohammed, I've had very smart investors explain to me that when you're dealing with inflation as high as we have it already, at 7% plus, that you're already at the point that the only way to resolve this inflation picture is to put the economy into a recession. Do you disagree with that?
So historically, that's been the case. Historically, when inflation gets this high and the Federal Reserve has lost its inflation credibility and has lost the policy narrative, they are forced to slam on the brakes. So historically, that's been absolutely correct. The question right now is, would they do that in the midst of a geopolitical shock? I put out an article in the Financial Times earlier this week, and I said, when you look at the probability, it's pretty even between whether they slam on the brakes or alternatively, they tolerate higher inflation and just push the problem down the road. This, we've talked about this over and over again. This is the situation everybody was afraid of, that by being late, you have fewer policy options.
Shepard.
So basically, that's a situation. The geopolitical risk kind of changed the rate height. And I guess that's going to become bullish. So if by March 16, the Fed decided to only increase by 0.25, I think that is very bullish for the market. So, that's why this past couple of days, we've been bouncing and we going up right now. So at this point, that's why I say the technical kind of change and also the fundamental kind of change. So at this point, there's some variation, right? So right now we're moving back up. We could just moving sideways and then break out downtrend line and then move up. Or, we could go down, move up, and then move down 50% and then move out. So this is the inverse head and shoulder here. So basically, there is a couple possible move that could go. I mean, it's still, we could still make another low. That's still in the picture, but we'll see what happens. But at this point, everything become a little bit more bullish. Okay, so just so you know, the war has changed the technical and the fundamental picture. So just get back on here. Okay, so basically that's what I could say at this point right now. And where we are projecting to go, I'm expecting to at least 440. Okay, and then if anything, if we are more bullish, we probably go up here. So right now we're in this down channel. This is the down channel. Okay, so this is the down channel, and then if you draw this to this will become a falling wedge. Okay, this is a falling channel, and this is possibly a falling wedge. So right now the target is probably 440, or or better. If we do better, it's going to be like 444 on the SPY, and then we'll see what happens, because that's where we're going to hit the top of this channel. Whether or not we have the strength to break out, we're going to determine on what news we're going to have. And we'll see, because right now at this point we are in a news-driven market, so everything is very fluctuate. Technical doesn't really dictate everything. So basically we could try to predict using technical, but also the news is going to play, because right now everything is very volatile. So at this point, that's what I'm seeing. Okay, and SPY is pretty decent, but let's see what else. The QQQ here, Q is nearly the same thing, exactly the same the way it is. The only thing with the QQQ is that the SPY, the volume on this reversal move here is much higher, nearly compared to the same here, right? So that means it's very bullish. And this past couple of days, the volume is okay. SPY wise, the volume is much lower, the QQQ much lower, and then right here. So that's what I see the difference. And the IWM at this point, IWM at this point right now is very strong. It's there's a man down trend line right here, but this is in the channel is about to break out a channel. So small cap is kind of leading. The IWM is actually leading the indicator now. It's moved. The only thing too, like I said, the volume wasn't as strong compared to these volume here. So the participation is not too much at this point. We need a little bit more confirmation, and we'll see where I think it's possible that the IWM might go all the way back here. And see what happened. When they go back here, maybe withdrew back a little bit, 50%, and then go up. We'll see we'll see the CPI and the Fed, what's going to happen afterward. Okay, so at this point, and then we have the Dow. The Dow is nearly the same thing. Come on, baby. Okay? Here we go. So the Dow is nearly the same thing. Low volume, but it's moving. It's not as strong though, but it's fine. So all these index are the same, and then transportation. I think transportation is nearly the same as the IWM right here. It's a 200-day moving average, and then it's on top of the channel right now. So it's possible it could break out. So right now the Dow Jones Transportation and IWM are somewhat leading indicator, and if you look at the TLT, right, so this is start to breaking out. So that's why yesterday I saw this shit, you know what, this is going to be bullish for the the NASDAQ here. So that's why the NASDAQ is strong today, right? We actually closed positive, reverse and close positive. So I think this where the yield is, the yield might go down here. So that's one thing I see with the TOT. More volume needs to be confirmed though, but still, it is technically it's much stronger. And then right now it's hit this resistance level. We'll see how it's gonna contest that. All right. Junk bond, man, junk bond, dude. This like instead of going this it was a good short play if we did use this. Then I forgot about this all, and I just recently remember. So those are in the general market wise, and then this is after this is like all these are basically watch lists, something I'm watching for. This has recently has earned a couple days ago, right? And then it's kind of like move up. I didn't play this, but I played Crown Straight as a continuation sympathy play, and also it's going to have earning next week, I believe. So I already have this. I already in this position. I already get to spread it, so I have a free play right now. So yeah, either way, I can't lose on this. So I because on Wednesday I was expecting the market to bounce, so I positioned a few of the move ahead, and but like Thursday night, Putin came out and then invaded Ukraine. The future was like bad, and then I like, oh, forget it, everything was a mess. Anyway, forget about that. All right, so something else to watch here, Macy. I think Macy is a potential play here. Macy came out on the earning, right, the other days. It didn't make a higher high here, so and then it dragged all the way down and make a lower low. So at this point, I'm not very bullish at this. Consumer discretionary. I think by right now people are spending because the weather's getting nice, and then they've been locked up for all this year. They're willing to spend. They're actually using the spending money right now, the saving. So I think by the next quarter, we might have some problem with like guidance wise. We might have some problem issue. So at this point, I think this might make this move out here and then break it down. That's what I'm thinking. So I mean, it is a possible place, something to watch for. Okay, so that's say Yosemite Joe. This one is strong. I've been eyeing this because like this is continuation play up from the earning. Like look at Thursday. It didn't even make a low. It didn't fill the gap here. Like this low gap I was waiting for to fill to go in. But like I think if the market is moving back up and strong, this will be one of a good play for a long play here. So Yosemite is one of them. OSCK, I also have a position in this already. And I positioned that on Wednesday, and also this right very strong, and then they have good news. The earning was okay, and then there was a good news. Somebody take a partial ownership of the crypto exchange that they have. So I'm expecting this moving up more. I mean, probably resistance is going to be around here somewhere, 65, 70. That's where they're going to hit the 100 days or 200 days. Okay, they're already past the 50 days. So if the market moving back, and right now tech is kind of leading, right, and like small cap too. So I'm thinking this is going to go up to possibly 70 if we have a long strong market. Okay, so that's something to watch out for. Excuse me. Live Nation here, it's kind of strong too. It's the reopening play. Possible breakout this channel, this sideways consolidation, and already break out. It's already make a high here. So hopefully, if we're going to consolidate a little bit and need some kind of like guideline, maybe the escalation of the war, and that might help with this. Okay, that's something to see. Look at the volume here. The move up on the earning is decent. Okay, so this is a long play possibly too. Okay. CAD. Okay, this one I was using to demonstrate what the SPY should look like. We might up, and then move down. See, that what we are expecting if the Fed gonna raise 0.5% interest rate, and then maybe 5 or 6 rate after that subsequently, right? This is what I was expecting, but now everything changed due to the Russian and the Ukraine war, right? So that's the thing. So that was just example. Nike, why did I put Nike in here? Well, I have a position in this already. I'm shorting this because I don't think they are like the way this position is nearly the same as the SPY too, right? Move up, and down right now. So at this point, I'm expecting it to go lower. and this is also discretionary spending, right? So in the long, I mean, in the next couple quarter, this might have a problem. All right. COSR. Okay, I don't remember. I still left this in here, but I mean, this is moving back up right now. At this point, it's kind of put in a inverse head and shoulder here. The way you look at it, shoulder one, head, shoulder, and now it's moving back up. I think the earning was okay, and then they have some upgrade and stuff. So possibly it is also a play. Okay. TTD, yeah, this one, the earning was decent, was good, but the Facebook news kind of dragged them down. But right now it's making a high now. Like if you position it on Wednesday, also this is going to move up. So at this point, if the market is strong, this is going to be possible long play also. Okay. And Zillow. Look at the Zillow. The earning was good, so this is a continuation play, I believe. It's make a high here of this range, and then on Thursday, it's still a high low. I didn't even feel this gap here, so it's very strong. I just got a position on this. It's semi long-term play for the next earning. So right now, if the market is moving up, I think this is going to drag up this too. And if the interest rate is only raised only 0.5%. 0.25%, and maybe only a few times after that, maybe 2-3 times after that, this is going to be bullish for the housing stock, right? So that's what I feel here. All right. Six Flag, okay. Six Flag, I think is partial play, reopening play, okay. And this is in the consolidation sideway, and this might break out, okay. Similar to the Live Nation. GameStop, I'm sawing something yesterday. So right now, look at that. It came out of downtrend line, and right now, like I say, if the interest rate they only increase a small amount, and then small caps is leading. Right now, is kind of signaling right now something is going on. I mean, I'm not sure what the catalyst is. Maybe AMC earning tomorrow or a couple days from now could be in a play right here. But like right now, the technical looks good. So, and if the markets keep moving back up, I think something gonna happen here. Something is signaling. C was okay, similar like all this stock reopening stock right now. Six Flags, C World, Live Nation. The chart are very similar, right? So sideways, and it's already broke out here. We'll see if it consolidate, and then it needs some kind of catalyst and maybe move back up here. So okay. And then this is Nordstrom. This is this week earning play, I believe. You know what? The way it looks right now, I believe we could have like a breakdown here. I mean, it could go up also, but at this point, I'm kind of like it's possible go move down, but this is a potential play. You could do a straddle. That's something you could do if you want. So that is something to look at. Technically, there is a potential play. And let me see here, DLTR. I just got into this today. I mean, it's already breakout. This is what I see, right? So DLTR, they already increased the price at the dollar store now. It's $1.25, not $1 anymore. And look at this, like up move here, and this is the falling wedge, falling channel. So we're gonna project and move up like this, right? The same amount, possibly. I mean, I don't know. I don't know how if the margin doesn't get eat up by the increasing wages, and possibly it could be a good earning play. So I just got in today is like 10% already on the option. I'm going to get a spread it hopefully, because I think the earning is on Wednesday. So tomorrow I'm either going to close out a play or like just get a spread it to get a free play, depend how it's going to move. Hopefully the market will be bullish tomorrow, and this is going to drag this up today, because today I believe someone come out and upgrade the stock also. All right, so that is still a play here. It didn't move that much, so I mean a potential if you want to play tomorrow for earning, that is something to play. All right, let me see here. Sprung, this is earning this week too. So at this point it's very similar to the other chart, the Nordstrom. So sideways, it could be a breakdown or break up right here. This is the long consolidation, so it's a lot of energy to move either way. So straddle, possibly a play here also. All right. Best Buy, this thing is this earning play this week too. This, I mean, I'm not sure. This doesn't really give you a good picture. I mean, it's it could go both ways, but I should not have to leave this in here. BJ, all right, BJ is the earning play this week too, I think. So I think it's possible on the upside. I mean, it's breakout downtrend line here. Okay, so we'll see. I mean, you could position as a long play because last earning is pretty good. All right, and we'll look at the volume coming up, and now it's just dragged down by the market, right? So right now, I mean, you play on the earning. You could come in before the earning and get the premium, get a spreaded, or or you could buy a few play and then just close out some, take back the profit, and let the rest run, right? So that's something you could play here on the long side, all right? And then last but not least, today, I mean, this thing break out. Well, all the solar energy stock kind of like broke out. So basically, this is one of the I'm seeing it's a broke out downtrend. So possibly it starts to move back up here in the long run. So if you want to play it, I guess it's something to think about. Okay, so at this point, that is everything. So I basically, to wrap this up, I think the technical has changed for the downside. So think about it. I mean, it's not absolute. I'm not. I can't predict this market. Nobody could predict anything. I'm just like, basing on some of the stuff, the fundamental and the thing. Oh yeah, the also it's the rate, the Fed rate changed too. So basically, let me see. Yeah, I think they did change. Fed rate. Yeah, it is 0.5 to 2.5, but I didn't have the thing. Yeah, never mind. Don't worry about it. Anyway, guys, that's it for the video. I mean, those are some of the watch lists, something to watch too, and then play for the earnings this week, and also the long-term play. So anyway, hopefully you found this helpful, and thank you for watching. Bye. Good luck.